Hello and welcome everyone for another weekly market commentary with myself and our Chief Investment Officer, Freddy Lim.
Hi.
We're excited to be back with you on top of the market commentary that we'll get into first. A couple of events are happening over the next couple of weeks. So on the 14th of September, we actually have an Investing Basics seminar. It's this time on a Saturday, so for everyone who can't make it during the week, it's going to be on a Saturday here in Singapore. So you can have your brunch and then afterwards join us for some Investing Basics knowledge. You can sign up for that on StashAway.sg/events or on our Eventbrite page or Facebook page, whatever you feel like accessing. We'll work on all of those. On the 18th of September, we'll have an Investing for Women workshop in Malaysia. Again, you can sign up for our Malaysia events on our website as well, stashaway.my/events, and also on the other channels, Eventbrite and Facebook as well. So let's give another quick update on the markets and a couple of the topics we've been discussing over the last year so far already, right? One of our favorite ones is China, right? There were some economic numbers being released over the last few days. Maybe you can put them a little bit into context for our listeners.
Well, given there's a lot of hearsay, naysays, and a lot of data that's been coming out of China, I would summarize and give you a more holistic opinion. Firstly, I think if you look at the numbers, the first most negative news was the export year-on-year number. It was came in at -1%, and that's sort of significantly lower than what economists were expecting, which was plus 2.2%. So you would have mistaken that as a very negative news, and the market would think nothing can be further from the truth. Actually, the market ended up on the day. It did not even react to this news. But what it says is that the market is a very forward-looking pricing engine. Whatever you have read and a lot of negativity is out there, it has already been fully priced in by the time you read it in the news. So be very careful with overreacting to the short-term negative news because the market is not as simple as that.
Yeah, and I think, with bad news usually, right? People or the market might even be expecting additional stimulus, right? Is that something that you...
Yeah, perversely, the Western number at this stage gave more room or excuses for the Chinese central bank to do more. Already this month, they have pumped $120 billion of liquidity in the economy. They have reduced the required reserve ratio from 13.5 times to 13. Remember that required reserve ratio is the amount of idle cash the banking system has to hold as a cash buffer. And however, that when that's reduced, extra liquidity has been released into the economy. So they have started to do something, and bad data just gave them more room to do more. Now, however, a piece of good news as well, not just about depending on central banks.
Yes.
The most important leading indicator in China, the China Caixin Purchasing Managers Index, which looks at sentiments and outlook of corporate going forward in China, the number has actually been better than what economists have been expecting, and it's also better than prior months. It's the first time in a long time we see a sort of a better than expected situation. Perhaps things are bottoming out on a forward-looking basis.
Another thing, let's go quickly, but Brexit, right? The ongoing saga.
Well, the good old Brexit is obviously not going to happen. 6 defeats for Boris Johnson in a very short time. I think it's a new record. It's just getting embarrassing. All the tough talk don't matter. When you're not Trump, you're not Trump. So what's most likely going to happen is that he can't do a no-deal Brexit by 31st October. So that means he has to negotiate with the EU, but the EU is unlikely to offer anything other than what's already been offered to Theresa May. So what's going to happen is the Parliament is also going to reject the same old deal again. And what's going to happen is that they're going to ask for an extension. And as you know, the more you extend the deadline of leaving proper, maybe the less willpower going forward to leave at all.
Especially for the population, right?
So after all the damages, all the gloom and doom and all the saga, maybe Brexit may not happen.
Yes.
So our prediction is more like it's going to be kicking the can down the road again, and it may not happen.
Yeah, no, very true. Good update on that, and we'll keep following those news items over the next few weeks. doing our commentary. Now for something very exciting, right? We've been working towards this for quite a long time. Lots of customer feedback that wanted something like this as well. We recently today, if some of you might have known, you get the messages on your phones or via email. For those who don't, we just launched our first SGD-based income portfolio. And maybe Freddy, you can literally explain a little bit more in detail what it is and why we did it.
Well, it's very exciting indeed. It's the good start of our 5-year roadmap from here, and this is just the beginning. But this itself is the first of its kind. The first high-quality income portfolio that has a long-term target dividend yield of 3.75% and a long-term net return of 4.4%. This constructed for that long term. And yet it's not concentrated. Most income products today are fairly concentrated in a few names and in a similar yield range, but very concentrated. And in this case, our income portfolio is multi-asset. It's spanned across 540 securities, across 6 asset classes, ranging from Singapore government bonds to Singapore high-quality investment grade to Singapore REITs, Asia ex-Japan REITs, a little bit of Asian high yield, and a bit of a Straits Times Index, the Singapore stock markets, to sort of fine-tune the balance between very safe assets and growth assets. That reduces price volatility, and yet you get paid on both sides. So the portfolio is constructed to be multi-asset, super diversified, very balanced, and it belongs to the category of a low to balanced risk profile.
Yeah. So who would you think this would be ideally for, or like who should be investing in that part of the portfolio or complement their old one?
That's a really good question. If you look at the first group of people who's younger to middle age, like say 35, you need it too, because as in any balanced financial plan, you always need a bunch of NAV-focused, growth-oriented portfolios, but you also need a certain portion to generate cash flow and income, and it also has a lower risk to balance out your overall profile. So this suits really, really well into a sort of more holistic sort of a financial plan. But also more distinguishingly is role for high savings and high age groups, investors, because even retirees can use this product now because it's a very stable, high quality income generating portfolio, and people now can use it to pay, to budget and plan and pay bills for their retirement. Or if you have a lot of lump sum savings, this is a safer product that has cash flow, right? It's cash flow focused. Yeah. You can use it also to generate cash flows, to pay bills, and to sort of fine tune your monthly budgeting, right? So it actually works for anyone who cares to plan holistically about their investment plan. Yeah. And similarly works very well for higher age groups.
Yeah, very much complements
yes.
our offering
yes.
over there. Well, thank you so much, Freddy. I think that's a very good first information for everyone. If you want to find out more about this, you can search our website. We have an article out there that explains a little bit more in detail as well, also a frequently asked question sheet. And if you have any additional questions, you want to learn more about it from someone in person or over the phone, you can call us on our hotline. Then you can speak to one of our customer engagement executives, or you can also write us an email to support@stashaway.sg or .my for Malaysia. So we hope you have a wonderful rest of your week. As always, put some comments underneath the video so we can address them in the future or next week when we speak again. Otherwise, we hope to see you in our events over the next week or so. So have a lovely day. Bye-bye.